Hello and welcome back to another episode of Fun Friday with our newest partner to the firm, Sam Morris. How are you today?
All's well, man. Apparently, we got the blue shirt memo today, man. Blue polo memo.
Everything blue, of course.
Yeah,
It brings out our lovely eye color, doesn't
that's
it?
right.
Yes. Well, really excited today. Obviously, every time we have Sam on, we're going to have a lot of value. It's going to be a treat here, if you will. We're going to discuss actually a couple of topics that we presented to an incredible group at our fund manager mastermind in Austin, Texas, just a couple of weeks ago. And this is really for best practices for fund managers, capital raisers, things of that nature. So if you are, in fact, someone who raises capital, this is definitely for you. If you're just an investor, this may not be the best fit for you. So I just say that now before you get into it. Don't say I didn't warn you. So with that said, without further ado, I want to get into a quick ad just about our summit event as well. Our summit event is coming up in New York City on September 14th and 15th, hosted in the One World Trade Center in New York City, of course. We're going to really up the bar and up the ante once more this year. This will be likely the best attended event so far, which is really impressive considering what's going on in the marketplace. We already have a ton of signups, but for those who are not familiar with our event, this is kind of bringing together the best and brightest of our entire network. Rob and myself, I can speak to that, and I'll talk about Sam here for a second, have spent thousands upon thousands, probably in excess of $60,000 over the course of almost a decade, going to summits, going to events, meeting people, networking, sharing deal flow, meeting investors, so on and so forth. And we basically designed an event that is bringing together the best components of what we find a real estate event should look like, and bring it together in one roof with our network, with access to all of our family offices, our joint venture institutional equity check writers, our high net worth individuals. Every kind of type of LP is there. And then also, naturally, we're not the only good sponsor in town, right? So we've got some of our favorite sponsors there, capital allocators, fund managers as well, kind of all in one room. And the focal point of this event is lighter on the content, heavier on the networking, and structuring it out that way. Sam, you attended two events prior to going to our event, which you'll be going to this event for the first time as a Lone Star partner. But can you speak to the summit event too before we get into the spiel here on what we spoke about in Austin, please?
Yeah, it's really interesting too because I've obviously gone to the summit event for the last couple of years as well, and one of the things that I think is just so different. Um, it's a smaller event, and the fact that it's like you said earlier, it's heavily curated with the attendees in mind, meaning it's going to be really kind of catered to the people that are coming. And the value associated with it, obviously far exceeds the cost of everything you do to get to New York City and be there. But really, what it is, whenever we go to events, I always say I look for just one little nugget because if I can find just one thing that can help change or pivot the trajectory of my business and what we do, it typically is going to be well worth it. At this particular summit, there are just, it's nuggets beyond galore. It's gold bars that are dropping a lot of times. And you just
It's
have
the
to know
highlight reel.
it really is. And it's the people that you're in the room with. And so you're in a spot where just the quality of people there is so elevated to, other events that we've ever been to. And the conversations are that much more fruitful and the learning opportunities are that much more greater. And it's an incredible event to be a part of. If you're able to apply and get in, it's just an incredible thing for anybody really to be able to join. You will take your business to the next level coming and attending something like this.
Yeah, I agree with that. And one thing I didn't harp on that you did several times, which I appreciate, is the application process. So, and how the room is kind of curated and taken care of, if you will. This is not just open for the general public, which means that you're not just going to be rubbing elbows or meeting someone who's just randomly off the streets that's going to talk your ear off about something you probably don't care about. This is an event exclusively for who we find to be the best and brightest of the network. This is an event for people who are looking to get deals done. And we know everyone in there either by personal relationship or by vetting them through the application process. So there's no guesswork about is the attendance going to be good or not. It's going to be great. And we will stand behind that. And I will firmly say, and I'm confident by saying this will be the best iteration of the event yet. We have done this 5 times now, or this will be the fifth time, I should say, I believe. And I believe with all the tweaks, the iterations, and then kind of our network that we've been able to amass over, the course of a better part of a decade, that this will be the best version of the event, the best attended version of it yet, with the highest quality sponsors, the highest quality equity partners. And, I think something just for everyone to kind of grasp as well, as we kind of close out on this thought. Someone who's doing deals yesterday, maybe 5 years ago in 2015 to 2020, is not the same person who's doing deals from 2020 to 2025, and is certainly not going to be the same person doing deals from 2025 to 2030, right? So we're constantly combing through our CRM, our database, to make sure that whoever we have in there is actually wanting to receive deal flow, because so many groups like, hey, no, we're only looking for industrial now, thanks but no thanks, or hey, we're actually not doing this venture anymore, oh, I don't like commercial real estate anymore, the market wiped me out. We get it. But who will be coming to our event are people who are actually still in the game, still in the business. They're hungry to do deals and looking to take their business to the next level. And, the tentacles and the spread and the directions of which, this person knows that person or can help you here and there, is really valuable. And because this event will be no more than 140 to 150 people, it'll probably be between somewhere between 120 and 150. You're gonna have the ability to meet everyone kind of in the room that you want to meet. So this is a event where everyone's very open-minded, ready, and willing to share, and that's the benefit and the value that you get.
Well, and that's big, Craig, because here's the other thing that you probably need to stress too is deals get done at this summit, right?
Yeah,
Equity is found, deals are funded, debt is found. There are things that actually get done at this summit, and the relationships that are forged here. We hear about it, like you said, we hear about it, like future deals occur because of it, right? And so you're in the room with the right people to help you grow your business.
yeah.
That's
I mean, with
probably the
that,
easiest way to say that.
yeah, I mean, with that said, we've got several case studies just from the last year of people saying, "Oh, I met this person. We're doing deals together," and then I see two people. It's like, "Wait, how do you guys know each other?" And it's like, "Oh, well, of course they met the year before and they ended up doing deals." Specifically, our friends, I don't think they'll mind it, but our buddies, one of our first JV shops who worked with Flagship Capital, actually worked with our friends Dan and Morgan of Hammer and Hamel, who are great operators. They are doing deals in Iowa, and Flagship Capital gave them the equity, I believe, on 2 deals. So very powerful stuff there. That's just one case study to which. But we're going long on that one. Just wanted to give the ad here. We rarely do it on this show. But on to the topic of the day, which is best practices for investor relations and raising capital by myself and Sam Morris. This is a really important topic, I think, for anyone. If you're a sponsor even, or if you're in the fund manager kind of capital allocating business, or if you want to pursue that, this should be some evergreen information that should really help you along the way to develop some practices and principles of what we're doing at Lone Star Capital. We've raised a ton of money, and then Sam naturally has raised a ton of money as well, hence why we merged and acquired his company for a very big ticket there, if you will. Sam helped us, though, just on the retail side alone, just for the 4 deals he did with us, not including the deals he did when he was operating himself or for the other operators he worked with last year. Specifically for our deals, he raised $27 million of high net worth individual LP capital. So that's just, who we're speaking to. I don't know how you give credit for what Lone Star did, if, could bring in on fund managers, what I've done, this, that, but Lone Star last year raised over, I want to say $80 million, maybe $100 million, hence the sign right there. So that just gives you a flavor as to the credibility that we have here in reference to talking about this subject. So without further ado, let's get right into it, Sam. In-person connecting, building deeper investor relationships. Sam, I'll let you take it away.
Yeah, I mean, we start off with a section called "Being the Brand," right? And really, it's about how you're going to position yourself, right? And intuitively what you have to offer, right, for your investors, right? And so, we talk a lot of things about this in-person connecting and how people are able to engage with one another and the focus associated with that. But the brand itself is really kind of interesting because what you try to brand as your own company, as your own fund manager or fundraising capital company, right, is the status that that has with it, right? What access that provides and the scarcity associated with what you're bringing to them. I mean, there's a lot of things when you're building your own brand of what it is that you're going to be able to offer to your investor, right? And when you start off with like, what is it that I have to be able to do it, and how am I going to build on these relationships? Brand was kind of one of the first things that we looked at, right? Because it was that identity association where people that you're going out and meeting, how they associate you with your brand and what you're having to offer them. But the personal engagement is the one I always love to go into the most with this, because we always say it's to be able to scale, you have to do some things that are unscalable, right? And it's that personal connection that you end up having with your investor. Really, it breaks down to that one-on-one, being able to understand what they want, what they need, and when you have something that is of value to them, how you're able to bring that. And so personal engagement is like one of those bigger things that we discuss, I would say, pretty often, right, Craig?
It's the biggest thing actually, and Rob and I in 2023, I think we're thinking about this, and in 2024, our goal was to kind of be everywhere and to be everywhere, but to meet with everyone and everything. And raising capital, being at conferences is a contact sport. What do I mean by that? There's no shortcut. You're gonna have to get your hands dirty, meet people, shake a ton of hands, be there and have early mornings and long nights to make sure you can meet with everyone. And as it says here, it could be meeting people at conferences. It could be going to a city and, basically having meetings along the way as you're checking out properties. It can be as simple as, hey, this person's a very high impact individual. Like, let's say if you're a fund manager and you have $1 million investor, it would serve you, but they don't live in your state or location. It would serve you to drive to that person or fly to that person, to meet them in person, to have you or have them understand how much you value them, and to consummate the relationship as much as possible there, if you will. So the personal engagement is something that you can't shortcut on. And Sam, I think you'll appreciate this more than anyone else, but there's no substitute for that. I think everyone wants to find a cheat code and a way to, be able to raise capital without connecting in person, send a couple of emails. And actually, funny enough, you could do that if you made a couple LinkedIn posts, or if you found an email list, or you connected people when the market was super hot. Let's call it 2019 to 2022. You could probably raise money by clicking a couple of buttons. But now that is not how it works. So you have to scale in the unscalable way, which means taking people to lunch, coffee, dinner, meeting people in person as much as possible. There's no way to shortcut that process that way. But from doing that, not only will you probably solidify the relationships, but you also may get a referral, or, be able to ask for a referral with confidence by not inconveniencing them, if you will.
Yeah, and it's kind of interesting because we call it going deep, not wide, right? I always joke and tell people I've been raising money since before it was cool. But the
It's
big
true.
way of doing that, right, is you deepen the relationships with those that you have. You really get to understand what their needs are. And so, because not all offerings are equal, not all offerings are going to work for those relationships, right? And so, but having a great understanding of your investor, what they're looking for, what their investment thesis is, and knowing if you have a product that you can bring to them, it makes it so much easier when you've been developing that relationship over a period of time to go, hey, Craig, I know this is something that you've been looking for. I finally have it, whatever it may be, right? And go, this is going to fit what you're looking for. And it's much easier to close that investor, right, than I'm going to go put out a blast on, emails or things of that nature, because we've developed something and I have a great understanding of you, the investor, and what your needs are. And
Yeah.
so
And
that's
learning
that's kind
about
of that overall theme is keep continue to go deep and not wide, and you'll build more long-term investors out of that.
Yeah, and when you do that, these investors become less of a commodity investor, which we'll probably get into later, where they're just looking for the highest return deal, as opposed to, well, Sam, he's been in the commercial banking world, he's been operating, he's been underwriting deals, he's been in all these deals. Sam is the expert, but you can convey this expertise and, you know, really show them how much you value the relationship by connecting in person there. And that segues perfectly into the long-term focus, which, getting to these deals and raising money is a long-term business and relationship game, particularly if you want to build your business the right way. If you had 20 investors who were really consistent with you that maybe made 100, call it 50K to $100,000 of annual contributions with you yearly, you wouldn't need this massive database. You just need 20 really to have a good business. Sam, can you kind of harp on that, please, if you
Yeah, and
will?
not only that, the value of those people are far greater than that. That person's just shopping for the best rate, right? Even if that person's coming with a lot of money, because the consistency of knowing when you launch a deal that you're going to have those, let's just call it that core 20 that's going to be willing to invest that $100,000 each. That's a couple $1 million. That you're going to have coming into each of your deals, and so that ability to sit there and go, wow. I want to continue to cultivate these relationships I've built. You spend a lot of time and effort and resources into getting those relationships, continuing to nurture and cultivate those relationships where they become, partners with you in the deals going forward. That's where true value lies, because you have somebody who is going to continue to work with you, and they've decided they're investing in you, the operator, or you, the fund manager, because of the things that you're doing associated with being able to connect with them and maintain that relationship.
Yeah, and when it comes to personal engagement as well, just going back to there and the long-term focus, kind of talking about point 2 and 3 here. I think a theme you might think is, oh my gosh, this is going to be kind of expensive. And you're right. It's not cheap to build relationships. It's not cheap, not only from a time perspective and a financial perspective, but the reality is that is the way, and that's the way you have to do it. It's not cheap to take people golfing or take them to lunch and picking up the check. But the long-term game, the back-end compensation for these opportunities, should they invest with you consistently, is a incredible return. So it does cost money to make money, as they say, spend money to make money, if you will. And there's no exception to that. And I just want to get people to understand the fact that, there's costs associated with doing business, and you got to make peace with that, like anything, with anything at all. And then long-term focus, one analogy I have is, I'm working with a swing coach and a golf fitter. The golf fitter takes care of my clubs, but I pay him a premium, and I work with him to make sure that I have the best equipment, and he knows my information now. He knows my numbers to set me up the best long term, as opposed to, cheaping out, not working with someone thinking I know the best. Well, no, that's not true. And then swing coach, hey, I work with the best people, the best mentors to make sure I have the best information. So that's how we look at it. That's how I look at everything with personal side. And then going into business, we view that the same with masterminds and stuff like that. We spend a lot of money to enrich our people to have a long-term focus. Getting into the next item, which is setting the tone and managing investor expectations. I really love this theme. I think this is something that I really do harp on after ask the investors when you have a new investor call with me or fund manager calls with me. I try to make it all about the other individual, of course, first, learn information, and then we get into our side of things. But Sam, do you want to take away on clear return expectations? Because I think
Yeah,
this is
I mean,
something
and,
that,
and so much of that is actually understanding the investment thesis, really, of both sides, right? Because if somebody's coming up to us and goes, "Hey, I really want to do industrial deals in Iowa," well,
you're in the
that's
wrong
not,
place, buddy.
yeah, it's just not a good fit for us, right? That's just not what we do. And
Yeah.
from a relationship standpoint, we may point you to one of our partners in that industry, but it's not going to be something that we're going to be able to work directly with you. I always use the example years and years ago when I was a young banker. I had somebody come to me and um, they wanted to. They needed a loan for his business, and it was something that we weren't doing at that time, and it was a small loan at that time, and I couldn't help that person. But from an expectation standpoint, I was very clear about it. Hey, we're not able to do this right now because of X, Y, and Z. However, what we did from a relationship standpoint is I referred him to a buddy I had at a different competitor. They took care of him, and it wasn't until years later. I mean, I want to say it was like 5 or 6 years later. He had a massive request and came back to me because one, I was very clear with the expectations of what were being set, and we ended up getting an eight-figure deal out of that. And so, it was something that you're just upfront when you're talking to people, like, "Hey guys, here's what you can expect." And when you're talking about, your investment specifically, like this is what we plan to do. Here's our business plan associated with it. Here's how we're going to execute it. And here's the benefits that our investors are going to reap from that. And just setting that tone from the beginning, it's just so dramatically better, because you're just going to be able to, everybody's going to have an understanding of what's going to happen. And that goes from here are the expectations of the deal to here's how we're going to report it, to here's what you guys are going to need to do when you get your K1s at the end of the year kind of thing. And so those expectations being set up front, it helps with the litany of questions you will have during the life of that investment.
Yeah, clear return expectations is super important. What I always say is if you're looking for the highest returns, 20 to 30 IRR, over a 3 or 4 year return, hey, I'm looking for that too, but it doesn't really work that way, if you will. So what we always want to do is, kind of let everyone know, hey, we're buying deals in this location, at this return structure, projected roughly with this cash flow, roughly like this. And if they're looking for something else, as you mentioned, then why would we waste their time and our time, right? So respect your time, respect your potential prospects' time there, if you will, in regard to expectations. And then also, if they're saying something that's perhaps against what you're doing, that's okay. But what is the wise thing to do is maybe educate them as to why you see the world differently, and perhaps you can flip them. The other day I was actually on the phone call with someone who's saying, yeah, I'm looking for, a, call it 2x equity multiple over a 3 year hold roughly, which is way larger than our return expectation. And I actually said, hey, well, you know what? We can stop the conversation right now because we are not even close to that. And I can almost guarantee that most people who would speak to that investor would say, oh, yeah, sure, we do that. And then actually don't, in fact, do that. But what I was able to do on that kind of specific example is to let him know, hey, we're actually different, and this is why you should maybe think differently. And he actually was very receptive to it. So sometimes saying exactly what you're doing to someone else, even if the return structure is different, will have a very positive benefit. And you could probably turn the conversation around on them. Sam, I'm sure you've done that several times before.
Yeah, absolutely. And realistically, when somebody comes and says, "Hey, look, I'm looking to double my money in 2 or 3 years," I think it was what it was, right?
Yeah.
I, I would go to them and like, man, that's awesome if you're able to do that. We're just not in that kind of a business to take that kind of risk, right? If you're looking to take that kind of a risk where you're looking to double your money that way, we're not going to be willing to take that risk, right? Because the reality is, more times than not, you end up losing all your money if that's what you're trying to accomplish. And so if you got a kind of gambler's mentality that way to find something that way, man, more power to you if that's your investment thesis. But we're very much more in that structured, get rich for sure instead of get rich hopefully, and that's kind of what we would look at. And so really, it's understanding what we do, how we do it, and the way we do it. And so when I'm describing people, hey, about Lone Star Capital, I'll tell them, look, we own and operate cash flowing assets, right, that provide our investors great generational wealth and peace of mind. Like, it's real specific, right? We're going to be here for a long time doing this, and that's what we're doing. We're not in this to go out and double your money in 2 years. I mean, could it happen? Yeah, that'd be great. But that's not how we set things up. We're looking to do something that's a lot more stable. And so just being clear with that expectation will provide the investors the knowledge of what they need if they want to pull the trigger and join us in those deals.
Yeah, we're here to preserve your principal, to give you monthly cash flow, and to grow your wealth. And, some years are going to have outsized returns. I think COVID and the ZIRP, zero interest rate environment period, was a situation in which people's expectations kind of got out of whack. But I think as we move forward to a more normalized market, people's expectations will shift, I think, likely to more of the mean and the normalness, which is, call it, a 13 to a 16% return, which is, by the way, awesome, particularly when you stack the benefits you get from real estate investments.
For
Going
sure.
on to liquidity constraints too, this is something that's important. So for Lone Star Capital, we only buy multifamily opportunities. So what does that mean? That means You take zero pre-risk closing. So let's say if the parameters of the deal change, let's say if perhaps you woke up and you had a weird dream, or a tragedy in the family happens and the capital can't be put to use there. Before the deal closes, let's say if we were going to close this deal on June 1st and the deal was fully raised, and you didn't want to move forward with that opportunity, we could refund you, of course, your initial capital invest with us before closing. But then after that, that money is locked up until the deal is gone full cycle, meaning when it sells. So just for our products, we explain that to people. But you might be a fund manager, capital allocator, capital raiser who raises for different type of opportunities. So just explaining to them what liquidity constraints you have and how this is a skosh different from the stock market is really crucial. But this goes back to the kind of early stages of the conversation, which is really asking them a bunch of questions, asking them what their investment, background has been. Has it only been stock market? Has it only been kind of other stuff? Has it only been, independent opportunities, not LPing positions? Understand this information so you can best understand their needs and also best educate them about the opportunity that you may have to work with them on.
Excellent.
Awesome. This is something that I really harp on. And the reason why I'm harping on this, in the title reads, Simplify Your Offering for Maximum Clarity. So we're doing real estate. We're not creating even data centers. We're certainly not creating some AI. This is not open AI. This is not, Grok or one of the other things there, if you will, that it's AI, artificial intelligence. This is not automation. We are doing multifamily investments, which is inherently a pretty simple process and simple offering in many respects. Obviously, there's complexities the further you go through the underwriting process and the inputs and such to create the projections that we're seeking. And there's something there. But to put it simply, if you cannot explain a product in under 10 minutes, where a high schooler could understand how it works, you probably need to rethink what you're doing. And that's specifically for multifamily underwriting. But I think most people right now are raising for industrial, for retail, for multifamily, for debt funds, for private credit. All those things really shouldn't be that much of a explanation, if you will. And if it takes you way too long to explain it, your prospect on the phone or Zoom will probably not understand, or will lose interest, or you're going to lose their attention. So you got to hook them pretty quickly, and it's got to be simple.
Yeah. We always, there's an old adage we say, if you confuse, you lose. Meaning if what you're presenting is not going to be clear enough where, that high schooler can understand it, you're going to lose that investor, right? And it almost doesn't matter how good the investment is, because if they don't have a good understanding of what it is, it's highly unlikely they're going to be able to pull the trigger and invest with you. And so, when you're talking about explaining things like that, it's really just got to be as simple as it can be, in simple forms as it can be. And it's one of the reasons why we moved years ago to that AAR, meaning the average annual return, versus IRR, which is the internal rate of return. Because, even though IRR is probably a better measure because it takes time into account for your investment, AAR was just so much easier for our investors to actually calculate it and make it real simple, going, okay, I get 15% a year. Got it. Right. I understand that. The IRR would be a lot less because it took into time, but they could calculate what that number was real simple. And so it's just understanding, really understanding your investors, who you're speaking to, and being able to convey the message that you're trying to get them very clear. Because like I said, if you confuse, you lose.
Without a doubt. The other thing to think about here is, we're all internally, at least on the investor relations side of things, reading a book right now, or going through a book called Story Brand. And when it comes to these offerings in any deal, you got to make the investor the hero of the story, and explain to them what's in it for them, and how this is going to help their life and benefit them, with simplicity. So making conversation all about them, learning about their needs, their wants, and making the offer simple as possible is great. And as the book says, minimize the amount of calories needed to understand the investment opportunity. On to the next, which is effective communicating and consistent reporting. This is something that can make or break an experience and a repeat investor here. So, Sam, if you want to take it away, that'd be awesome.
Yeah, I mean the communication side obviously is pretty substantial, right? And conveying this upfront of what an investor can expect when they invest with you. This is a more along those lines of clarity and the expectations and things like that. We would tell them, hey, every month you guys are going to be getting reports on the property, right? And every quarter it may even be a little bit more substantial with greater analysis associated with what you're going to be getting. And in addition to that, having something that they can review for another property, like a sample report, to show them what they can be getting, right? It actually further answers the questions in their own mind of how am I going to be able to know what's going on with my investment, right? Because it's not as easy as say the stock market where you can just daily pull up what it is, but you're not going to know what's going on with that company. What we can provide is either further in-depth analysis on what's going on with your investment as it pertains to you, the investor. And the responsiveness aspect of these questions when things come about, I would say we're extremely vigilant in getting back to our investor base as far as the time and how efficient we are with that, right? And so we talk a lot about being just replying to those investors and how fast we can get back to them, and the prospects too, right? Wanting to understand more about what we have, speed of which you get back to those people and having your talking points ready to discuss is tremendous when you're doing that because it alleviates a lot of the concerns associated with our investors.
Yeah, Hunter Thompson, our friend, who, of course, is the founder of ASIM Capital and maybe more famously and known for Raise Masters, who runs a community, an educational, mastermind there, if you will, to help people with capital raising as well as sponsors and connecting both parties and such. Um, Always shares this example where he had two deals. One deal had a great investment return. One deal had an okay investment return. The okay investment return, though, had phenomenal communication, phenomenal reporting. Every investor knew where they were along the way. The first deal that had a great return actually had really bad investor relations along the way. No one really knew where the deal was, but the return was way better full cycle. Well, guess what? Hunter, before he was the lead sponsor, never wanted to work with that person who didn't report well, but they were really happy to work with the person who just had a modest to okay return because everyone could sleep well at night. So having consistent reporting, effective communication, and letting people know where these deals are at is super awesome, and frankly vital because most people that are looking for these opportunities or investments, I would say generally are pretty competent. This is not their first investment, generally speaking, and they're used to having full control and autonomy with all of their kind of capital, whether it be their primary residence, whether it be their retirement accounts or stock portfolios or other maybe rental properties that they own. So if you're deferring your capital to a group, you're at the mercy of how they manage and operate that deal. So having the correct communication is important, and if you're a fund manager, this is important for you for understanding how your portal works, understanding how the investment works, getting that communication that we give to you to put out to your investors. I can't even tell you how many times actually we hear that we work with partners and their investors are like, that group doesn't report, or they get mad, and then it's like, well, actually no, we send everything there. It's up to your third party fund manager to actually send that out to them. And sometimes they don't. And, quite frankly, we don't want to work with individuals who leave their investors in the dark because that reflects upon us, unfortunately.
Yeah, and so that line of communication that we're talking about is just one more point, right? Where what people don't realize is that's another ability to communicate with your investor, right? It's actually another opportunity. Every one of these things should be looked at as an opportunity,
Build
right?
trust.
Yeah, whether the news is good or not so good, right? It's another opportunity for you to communicate and be in contact with that investor, further deepening that relationship, um, to enable them to know that you're on top of things, right? And so, for those people that lack the reporting requirements, it's a really missed opportunity to further deepen those relationships that are going to continue to help you build your brand and build your company.
Without a doubt. And consistency is key. You can't just do it, oh yeah, every now and then, willy nilly. If you can ideally work with people who've got it, like clockwork, like the first and the 15th, like it's going to come in no matter what. Your distributions are going to come in roughly or exactly at this date every month, and then the reporting will come out at this time of the week, at this time of the month, all the time. That is a very, very powerful thing. And if you're a fund manager, if you're a third party capital raiser here listening to this, when you're going through the process of finding sponsors that you would want to work with, one of the biggest things you need to understand is, get a sample of their reporting, understand what it looks like to work with them, understand what their reporting is. Are you comfortable with it? Do they miss reporting ever? Are they lazy on things like that? That is super, super crucial.
Yeah, because it's going to reflect on everybody involved into the deal.
Without a doubt. And then obviously, communicating points, whether someone wants to work via email, via text, via phone call, via voice message, meet people where they are.
Perfect.
Going on to using cell phones for following up to stay engaged. I love this one. I think people who know me know that I actually love phone calls. I don't really like FaceTimes that much personally. This is maybe a millennial in me. A lot of millennials and Gen Z love FaceTimes. I don't really love it. I don't really love text either. I love phone calls and emails. But that's just me. But understanding, reaching out to people for updates is super crucial to stay engaged. Check in phone calls. Recently this year, actually, funny enough, for the last 5 months, sadly, we have not been able to have a deal, but that hasn't stopped me from reaching out to our investors and our fund managers to touch base to, ask them, what's going on with them, what's new in their world, what are they investing in, what are they seeing, do they have any inputs or stuff that we should be thinking about? Always keep in touch with them, always kind of keeping a tab open and whatnot is very crucial. And that's something that if you are in this business, just realize that if you're not calling your investors, guess what? They're probably getting called from other individuals. Everyone's trying to get their attention, right? So you just got to make sure that you're, touching base with them, you're connected with them, you're communicating consistently.
Yeah, and then that's what we call developing the relationship, right? I mean, that's plain and simple what that is, right? And it's almost more important to call when you don't have a deal, right? When you don't have something that you're going to be selling that investor. And really, it's a true relationship building call because, like you said, you're looking for follow up. You're looking for other stuff that's going on. You're wanting to know what they're feeling, what's going on, what the sentiment is, because it's just going to make you better as a company and you better as an investor relations team.
Sam, when's the best time to raise capital?
Yesterday, but all the time you're raising capital. So
And well before you need it. And that's kind of
absolutely.
the point that I wanted to make here is, I don't know when we're gonna have a deal coming up, but I know that everyone is aware that we're thinking about them and that we're working to build a relationship and trust with them. And that's kind of the point we want to echo here for sure. So follow-up sequencing, people might notice from this on my end, but I'll send a couple emails back and forth, then I'll call, then I'll text, and I'll go back to email. Change up the sequencing sometimes. Try to figure out where people are at and what works for them. Sometimes it looks like I'm talking to myself, and sometimes I am, and that's okay. Which goes to the next thing, which is requesting feedback. I think this is something that very few people actually do. But you want to understand this goes back to combing through your list. Maybe someone is, you notice that they're maybe just kind of blowing smoke, as they say. Maybe they're just, fabricating their interests or they want to see what's going on, but they're really not a real prospect. But unless you ask for feedback or understand what they're looking for, it's hard for you to actually have a good pulse as to how much capital you can raise, what their interest level is, things of that nature. It's very important to request feedback, ask where people are at. And, for us, it's like if a fund manager doesn't want to work with us or if an investor doesn't want to invest with us in a specific deal, just understand the why. And it could be a life situation. It could just be because they raised for a multifamily deal in the market that you're in. It could be a multitude of things, but just figuring out why someone maybe said no is very important.
Yeah, and not only that, um, it'll actually help you in your future offerings, right? Because if there's something that you can change and it's minimal headache to change, right? And it enhances the deal, right? It's something that, we may have blind spots on and, we're constantly learning in this business as well. And so, the investor is the one that we are catering to. And so we want to know what they're feeling and how to continue to do business with them or to continue to do more business with them.
At the end of the day, we design our offerings and we are, obviously doing what we think is the smartest and best value play, but we're doing stuff for you. We are doing deals for you and what you're looking for ultimately. And all we can do is bring that to the table, but without feedback and knowing where people are at, it's tough to know. So unfortunately, we haven't developed the ability to read minds yet. But going on to the next subject, which is building authority through content in LinkedIn, obviously doing stuff like this, but content collaboration is really great. And one thing I'll say here is you don't necessarily have to have a podcast, but it might actually behoove you to either be a guest on a podcast or for sure to guest on podcasts. But going above and beyond that, I think a lot of people who raise capital definitely know someone who owns a rental property. So, maybe working with a 1031 exchange partner would be great. That could be the easiest way to raise a bundle of capital because it's in a large chunk. Our minimum is $1 million to 1031 exchange with us. So you might be able to have a 1031 exchange slide conveniently right into one of our opportunities there, if you will, via the tenancy and common tick structure. And you might be able to raise a bundle of capital from that perspective. The other route is for self-directed IRAs. Self-directed IRAs, retirement funds, accounts like that are awesome. These are great, great ways for people to raise money in accounts that's kind of locked up there, if you will. So, what could you do to kind of tap into that pool? Well, work with someone or develop a relationship with a self-directed IRA custodian there, if you will. Create some content with them as to how you're offering your solution could be a benefit to their retirement and investing plan. Where you could get potentially a better return than what the traditional way would be.
Yeah, absolutely. And so when you're talking about, you know, we're talking about building our authority, right? Through that content that we're doing. I mean, for everybody's going to be a little bit different, right? And everybody's going to have a little bit different skill sets associated with it. I guess podcast a lot just because of the gray hairs that I have on the industry. And a lot of people want to talk about a lot of different things. And but having our own podcast too, in particular our Fun Fridays, things of that nature, I mean, it enables us to bring in current experts in the things that we're wanting to discuss, and truly just be more of a give, right? We're adding value to those listeners and those people that are watching, and with wherever they are in their journey for real estate investing. And so it's been one of those things that you got to figure out what works for you, and how you can really add value. To me, it's more of a give than it is of what we're going to be able to create for ourselves out of this. It's a way to enable us to continue to grow our base of investors, grow our authority and our contacts throughout the market. But it really is a giving opportunity to all those that are out there.
Couldn't agree more. And it's something where if at least if not, with the content creation, you may not get the direct benefit, but hopefully, someone could take that to their advantage and you could help someone else out if it doesn't necessarily directly benefit you. But on the content collaboration side, leverage AI and automation for efficiency, showcase deal expertise and industry insights. That's kind of, whether it be sifting through someone's information, do some content writing, stuff like that, whatever it may be, just become the expert, build the authority. It's hard to do that if you're not creating anything there, if you will. For most individuals, perhaps you might be the outlier there, if you will. Like one of our fund managers and potential partners is Keith Misner, who had a very long and robust commercial real estate career where he is a commercial real estate guy through and through. So his investors already know him as a commercial person where, he doesn't have to really convey much more expertise than already being the expert, right? But if you're not the unique outlier like someone like that, it may be positive and useful to do stuff like this to let your kind of industry know and prime the pump that, or your friends and connections know that, hey, you actually are a real estate professional. You are someone who has expertise and knowledge within the industry. So that could be, useful for you when you start your fundraising process. And then naturally, this segues into a LinkedIn presence. I think, if you are in the world of LinkedIn or in the world of capital raising, you're likely posting on LinkedIn and other social media platforms. I think it's just kind of the industry standard. It's kind of something that you have to do, like it or not. I'm not always comfortable with my face and a video being posted all the time, but that's just part of the game you got to get comfortable with.
Yeah, and not only that, I mean, for me, LinkedIn is, I'm not a big social person at all from a social media aspect, but LinkedIn is the one where you do find the most, I would say, business professionals, and a lot of people have the ability to target the audience that they're looking for on that platform. And so it's something obviously we're real big at Lone Star, and Both Craig, Rob, and myself, we're fairly active on LinkedIn
Oh yeah.
um, to be able to drive the leads associated with what we're doing into the business.
Yeah. And then also another one, if you want to, really scale up your business, there's tools like Sales Navigator and whatnot. Once you kind of create your avatar, someone who is a prospect there, if you will, a potential investor. So leveraging some systems there could really help you kind of develop a quicker career path, if you will, a quicker way to, hopefully find some investors. Then going over to due diligence and building investor comfort, super important here. I mean, obviously building trust and comfort. Without that, you're not going to get investors. So Sam, do you want to take it away here?
Yeah, I mean, really speaking of fund managers right now, one of the things that at least I did in the past, and a lot of people would say it was crazy too. When we were getting into deals, we would absolutely go and not just meet our sponsors, but we would go to their offices. We would meet their teams. We'd want to know who the not just the corporate level management was, who's the mid level management, who are the people that are going to be running the properties that we're investing in, and so the amount of due diligence and vetting we did was tremendous. And all of this was prior before we would put an investment in. And so obviously we would tour properties alongside of the teams and things like that. And we would go and obviously dig in, do our own underwriting, make sure the business plan was viable, and things of that nature. But it was a tremendous amount of due diligence and vetting before we put money into either sponsors or doing the deals ourselves. And so, the the workload associated with that was just so tremendous that it gave our investors a great comfort level that, hey, we know what's going on, we know the teams that are going to be running it, and we know the business plan in and out and how it's going to work. And so, from a due diligence perspective, it became kind of just a standard. And it was always just surprising that other fund managers weren't going to that level. And when you go to that level, it's surprising how many investors just have that much greater comfort to invest alongside you into those deals. And so that vetting process was something that we clearly take um, very seriously, and we would go that extra mile. And it doesn't matter where the sponsor is, right? If their corporate offices are in New York or some other areas of the country, that's where we're going to see where it is, see what they do, how they operate, and we're doing that before we go to the properties themselves.
Yeah, I mean, so as we get into the slide here, for those who are watching, property and sponsor vetting, as you mentioned, property tours, meeting sponsors personally. I mean, Sam, you came to our conference twice, but once really. I mean, we'd met in person, obviously prior. You and Rob have a pretty long-standing relationship, but you came to our summit event, and then next thing you know, I think a couple months later, we had a deal that suited your eye, or maybe two actually, if I'm not mistaken, and you worked with us on those. But that was from spending a lot of money on your end, but also just making sure that you felt comfortable with working on us, and then also looking at our deals for quite some time.
Yeah,
Looking at our underwriting, knowing how we do our deals is super important. Not just saying yes to the first deal, but watching it. There's no, this is the best deal ever, this, that. So if you're, a fund manager looking to learn, looking to, develop relationships, go slow into these processes, of course, if you will. If you want to have good, long-standing relationships there, if you will. And that just goes back to the fact that these deals are liquid. So these are 5-year deals, typically speaking, and a lot of deals that were bought, in 2021, or 2020, they might not be selling for another 4 years. So it could turn into, a 7 to 10 year relationship. So you better really feel comfortable with the individual that you're working with there, if you will. Then
very
going
much
over
so.
to yeah, but going over to fee transparency, there's a market standard, there's not a market standard. So knowing what that looks like and kind of vetting some individuals and asking around, you should figure out pretty quickly what's appropriate and what's not. But this is something that's kind of gotten crazy in our world with how some things are working. And, sometimes you see structures that are outsized in some respects, but they could be making money in other ways that don't really benefit you, do not really align your interest there, if you will. So understanding how sponsors are getting paid, what that should look like. Spoiler alert, sponsors should really be wanting to get paid on the back end performance and compensation of the deal. They should want to be defending their promote, which is their upside, into their deal. That's how you want people to make money, because then they're incentivized to manage the deal from soup to nuts, start to finish, as effectively and efficiently as possible to protect your dollars.
Yeah, and all that goes into developing the trust, right? I mean, that's how we, you put all this groundwork in ahead of time, and that's what eventually builds a lot of the trust for us to be able to raise what we need to raise for our deals.
So one thing here that I put in here, and this is something that I really, really pride myself on. I speak, a certain way. I would say I would definitely say, I speak, I colorfully. I use a lot of adjectives. I get very excited. I'm an animated person, but I really, really do my hardest and darndest to not over exaggerate how good I think a deal could be. A lot of times you might hear people who are a little more novice or people that I wouldn't really trust. Oh, this is the best deal ever. You have to get in this deal, blah, blah, blah. I don't like doing that. But what I will do is say, hey, I like this deal so much. I can't say what it's going to be, but this is what I'm doing personally. So remember, there's a deal that Sam and I are in, of course, Preserve, Copperleaf, Cortland Copperleaf, formerly known, where I said, hey, I love this deal. I think this deal very well could have the chance to be the best deal we're going to do in this kind of new cycle. So much so that I'm taking the entire gain of my house and putting it into the deal. So that I think conveyed very, very convincingly my thoughts on the deal. That's not being dramatic or exaggerated. I could show the screenshot to support that right there. I'm only telling you to do what I'm doing, and I'll do obviously what I can here to convey why I believe that in a very, very thoughtful manner, if you will. There, but to make sure you avoid, oh, this is the best deal ever, being hyperbolic, being dramatic. It really does hurt your credibility, because if you say that about every single deal, well, then you can't really be taken seriously, can you?
Yeah, and I would go one more step above that too, because I think it's a very valid question a lot of investors have when they ask how much skin in the game you're putting into the deal. Not just as fund manager, but the GPs. We want to know how much they're contributing to the LP side, and I think it's a very valid question.
Yeah, if some sponsor has nothing in it, that's concerning. As some sponsors have too much in it, that could also be concerning, right? Because if the deal doesn't go well, they're probably, gonna be the first one to put dollars in to, help the deal out along the way. And understanding, sponsors backing and how much capital they have throughout the points of the cycle could be really important as well. So I think that just about concludes our conversation here today. We really appreciate you listening. Sam, do you have any closing or final thoughts here that could be helpful for anyone, or anything that we perhaps missed?
Yeah, I mean, raising money is a contact sport. It really is, and from the standpoint of you need to be in contact with those that you're trying to either make them become your investor or show them a way to invest into the deals that you're ready to present. And so, understanding it's a contact sport, and the more you're in contact with your people, typically the more successful you're going to be associated with your fundraises.
Yeah, and I think the biggest thing to realize is where your other investors are at. Everyone's going to kind of have a core group of people, their sphere of influence, they call it. Their, friends, their families, people they went to college, to high school with, close friends, people from their country club, stuff like that, their base. Those people need servicing. Those people need you to give them their full attention. That'll be your core. And then from there, you'll spawn out to people you don't know, people that you might have cold outreach to there, if you will, that you try to convert, referrals, stuff like that. But people are going to reach out to them. So make sure you implement these practices in place. Make sure that you choose the right sponsors, the right deals that align with your philosophies, what they are looking for, things of that nature. So I hope this was helpful today. We appreciate you listening to the show. If you have any feedback or comments for us, or would like this presentation or the slides or anything like that, please let Sam or I know. We can help you. Sam, how can people reach out to you if they want to learn more about you? Speak to the wise man on the team there, if you will, the person who has been market tested with a couple more grays than your counterpart here.
Yeah, no, easiest way to get a hold of me is email, and it's sam@lscre.com.
Awesome. Well, Sam, thank you so much for your time today. High impact as always. Really appreciate it. If you're looking to learn more about our events, by the way, whether it be a fund manager summit, our New York City summit, other meetups we're doing, or our travel schedule to hopefully for us to connect, we have some really cool stuff coming up here down the pike that I think you might be interested in. To learn more about how you could work with us, let us know. If you have any questions regarding Lone Star Capital, if you want to learn more about working with us, email me. It is Craig, Craig, at LSCRE.com. We'd love to connect with you and learn more. For those who are listening today, we appreciate you, and we'll see you next week.